seems that a lot of people are still attributing Tesla's successful Q4 to China. Granted, a great deal of the success does come down to how impressively Shanghai has ramped up. But for this quarter, we'd heard many reports of a lot of ramping up coming out of China already, but it would appear a lot of analysts didn't seem to read into this too much, and were still shocked at the results, and think it mainly comes down to China, partly due to the fact that we had this outstanding 70,000 units sold in China in December alone. But when I look at my predictions, I had accounted for China, so this didn't take me by surprise, and checking my numbers, my China figures were quite close. But as most people were so shocked by this, it is taking too much of their attention, and they're distracted and not seeing what is happening in Fremont. I've been reporting on the success in China all year. It has succeeded all my forecasts I had for those factories earlier in the year. I was astonished. I also said at the time, very few people seem to be talking about this, what a big deal it is, and what it means for the future of the company. And I gave a reason. Everyone was too focused on Berlin, Texas, and Cybertruck. Perhaps it was the media too distracting people. Everyone was too frustrated that Berlin was suffering continual delays, and Texas taking longer to build. Then the fact the coveted Cybertruck simply won't happen in 2021, and now not until later in 2022. These issues attributed to the drops in stock price we saw halfway through the year. But it's obvious that inevitably these factories will open one day. And I would say, so what if they're delayed by a few months or longer? Just look into the future a couple of years ahead and think how little difference it's going to make that these factories took a few months longer to open than was initially expected. Instead, focus on the fact that the Model Y in China has exceeded its alleged capacity, and I followed China's success quite in depth this year as it was altering my entire expectations of this company. I had no idea Tesla could manufacture so many cars in such a small space. It's possible a lot of the reason why Shanghai is doing particularly well is that they are not suffering so much from supply chain issues. Why? Because all the supply basically comes from China in the first place. So if you're in China, then you don't have to worry about waiting for ships to deliver the parts you want. Yes, China has done unbelievably well, but it was missed by most people being distracted by Texas and Berlin. Given how enormous these facilities will be and one impact it will have on the company, then it's understandable. But in this Q4 deliveries, China took the spotlight as, like I said, most people were not expecting this. But there was enough evidence around to support that this might have been the case. Now, what I have been trying to point out, while everyone has been so busy being surprised with Shanghai, that now they're missing what's happening back in Fremont. What happened was that in Q3, there were approximately 10,000 fewer Model 3s delivered out of Fremont. And my theory on this was that it was because Tesla was moving to the standard range Model 3 from the 2170 batteries to LFP batteries, hence the line being down. Therefore, in my estimates for Q4, I did increase Model 3 by 10,000 more units from Q3 to compensate for the downtime. I actually did also say that it may be possible now that Tesla is less battery constrained with the Model 3 now due to the fact that there is a higher abundance of LFP batteries than there are 2170. I thought that there could have been a possibility that Tesla could suddenly increase the production of these Model 3s as a result, like we saw when the Model Y in Shanghai moved over to LFP. I think this was a reasonable assumption. One of the reasons I actually kept quite reserved with my Fremont estimates is that I also heard a rumor that there was a bottleneck with the paint shop too, and Fremont can only make so many cars as a result. I have to admit that did influence me somewhat. Okay, so what has happened? How did Fremont produce an additional 10,000 units than they usually did with these extra LFP batteries? Well, my initial thought was that this was an additional 10,000 Model 3 units. But then think about it for a second. Why would it be? Because CATL are able to offer that many more batteries than Tesla had previously? Perhaps, yes. That was my thought. But what also has happened as a result? Well, Tesla have replaced 2170 batteries with LFP batteries. So what does Fremont actually have? Well, they have extra 2170 batteries, as they're no longer going into the standard version Model 3. They can't use these 2170 batteries in the standard range, as that now uses LFP. So what do they do with these batteries? Now these LFP batteries, sure, it means the cost of the standard Model 3 reduces a few $1,000s, excellent, but we've created a surplus of 2170 batteries too. So what do we do with these? Would it not make sense to use these batteries in the most profitable vehicles where Tesla will generate the most margin? It probably would. I think that these LFP standard Model 3s are going to result in more Model Ys, likely long-range version Model Ys that have increased in price 20% over last year, have huge demand, and are incredibly popular. Don't get confused with chip shortages and supply issues. Tesla, and likely all other BEVs more so, are still very battery constrained. This has never changed. It has always been the issue for every company wanting to ramp up their EV business. Therefore, these extra 10,000 units from Fremont, well, I thought they would have been standard range Model 3s, but in reality, they're most likely long-range Model Ys. Now I say it, it sounds obvious. It simply makes sense for good business. The fact Tesla can sell more long-range Model Ys along with the cost savings in LFP for the Model 3, then I'm starting to wonder just how margins are going to be this quarter. One of my concerns was the Model X ramp-up might have affected margins like the Model S ramp-up affected margins in Q2, but I believe the Model X and S use the same production line, so this might not even be a thing. This could end up taking margins even higher than we saw last quarter. And this is before Tesla are even using 4680 batteries, let alone their own in-house LFP batteries. I run scenarios on margins and they get to insane levels, especially when you eventually factor in FSD. I'm pretty sure I would have been laughed at if I'd suggested margins approaching 50% potential for some vehicles. But now we've been so shocked so many times, people are starting to believe anything is possible from this company. And this Deliveries result is just another example of how impressive this company is. On top of that, I bet those LFP Model Ys coming out of Shanghai also have unbelievable margins, at least as a percentage, if that's what's been ramped up the most in Shanghai, of which I'm going to guess it is. Then again, that leads to more reasons as to why margins just might noticeably be higher for Q4. I will start running some scenarios as to what can come of all of this. But just some quick experimenting, a minor change on gross margin ends up having a big impact on net profit, especially when compared to Q3. On top of that, I'm also still wondering if Tesla get to recover their unrealized losses on Bitcoin too, now the price of Bitcoin is recovered. This will be interesting to see, or possibly Tesla actually sold more Bitcoin this quarter again, and it will add to net profits. There are some chances Tesla could have a really good EPS for Q4, better than anyone can expect if this is the case. It actually doesn't stop there either. What other surprises could there be too? Well, FSD's been making some progress. FSD is not feature complete yet. Therefore, Tesla are not able to realize all the income that comes from FSD. Instead, a lot of the income from FSD has to be deferred. Tesla are only able to realize a fraction of that income. But as more features come into fruition, like Smart Summon, then more of this deferred revenue is then realized. The latest versions in FSD might be enough of an advancement to allow Tesla to take another fraction of the deferred revenue and realize it as profits in one go. Right, so it's probably worth hanging on to my options for the time being. Seems like a further asymmetric investment is still here. Absolutely not financial advice. Make up your own minds when to sell your own options. I know a lot of you bought them. I will let you know when I sell mine though, and I'll post it live on Twitter, so follow me there. But if you're happy with doubling your money already, then that's a great return too. We all have different financial situations, but one thing's for sure, it sure is fun. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.